I think it's backward looking and very myopic. I'm trying to look through the cycle, or I think our member firms are trying to look through the cycle. We're preparing for the upside. Obviously, there are challenging times ahead, and I don't want to dismiss that, but I think it often gets overplayed up here.
Why?
Well, no one wants to be wrong on the upside, right? Everyone wants to come up, and if it's not as bad as they forecast, then they can say, see, we survived. But I think you have to look through the good factors. China's coming back. We just saw the numbers from last year. Okay, that was last year. I think we'll see a rebound. The U.S. consumer is incredibly resilient, and I think Europe is going to skate by with only a shallow recession.
You just had a board meeting, and I know that's always a very useful brains trust for dipping into how people feel about some of these key themes. What was expressed about the reopening of China? Because I know it ranges from this is terrifying, we're going to get a secondary inflation impulse, to actually there isn't that much pent-up demand, they're all spent out, they didn't get the same support as people in the West got through the COVID pandemic, and we're not going to see consumer spending as strong as we saw with revenge spending in the West. I mean, it's an extreme range of views.
It is, indeed.
What are you centering in on?
Our forecast for this year is about 5% growth in China. That's off a low base, obviously. I think there is some revenge travel. I think you will see tourism up, especially in Southeast Asia, and I'm more positive on China in the near term. Longer term, the demographic numbers out this morning are pretty harrowing, so they have some medium to long-term challenges. I think this year is going to be a nice rebound in China.
Demographics may be destiny, as they say, but I mean, those issues are a long way off, aren't they?
Well, they've already started. We've already seen a turn in the workforce. In fact, we saw it several years ago. They need workers, just like we need workers in the West and the U.S. as well. We have a worker shortage in the United States, and they will in China as well.
Just to focus then on the United States, I mean, the market behavior suggests that no one believes that the Fed needs to hike much further. Yeah. The Fed doesn't seem to believe that, and none of the Fed speakers are peddling that line. Where do we get a meeting of minds on inflation and interest rates?
Yeah, I think like Mario Draghi once said, I'll do whatever it takes. I think Jay Powell's channeling that in his inner Paul Volcker. I think he's going to do whatever it takes. I think he's going to bring inflation down. I think we will see inflation turn, especially in the goods sector. Services will be a little slower. I would listen to Jay. I think he's very focused, and he's going to do what it takes. But I'm optimistic that inflation is going to turn in the second half of the year.
Right, but does that still mean that we top out on rates at 5% plus?
I think so, yeah. I mean, markets are trying to look through the cycle, as we just discussed, so they're trying to think, what does the other side look like? But in the near term, Jay's going to do whatever it takes.
Yeah. To what extent do you think he's a student of the 70s and the whole Arthur Burns experience? Is he worried about perhaps taking the foot off the brake too quickly?
Well, we're contemporaries in age, and we all lived through that. So we remember what the 70s looked like, and it was a pretty harrowing time. I remember when interest rates for an auto loan were 21%, mortgages were 13%. We don't want to see that. So I think he's focused and adamant to bring this cycle to a turn.
Yeah. Let's talk about debt, because it's always a focus of IIF. You put out some great research on that. Do we need to be concerned that debt is still continuing to rise, both public and private?
We do indeed. 350% of GDP globally. We're up $100 trillion over the past 10 years, up 46 percentage points. You know, it's like the old adage, how did you go bankrupt? Slowly, then suddenly. I think fiscal policy is tapped out, monetary policy is tapped out, and as we said before, the private sector is going to have to lead this cycle, and I think the banking sector is certainly prepared for that.
Yeah, well, how does that happen with debt levels so high?
Well, a lot of it is sovereign debt, and a lot of it is Chinese debt in terms of emerging markets. So we just have to be prudent in our debt, and sovereigns have to figure out a way to manage through it. They have to find models by which they can pay off this debt over the medium long term, and you do that through growth, Jeff.